Money!
What Your Bank Doesn't Tell You, a podcast by UMushroom.
Welcome back to the podcast What Your Bank Doesn't Tell You. We are very glad to be back, and today we have actually a very special topic. Today we are talking about how to get started in respect to investing. And given this is a challenge for many people, also with our friends and acquaintances, we decided to do actually a step-by-step guide how you can become a successful investor eventually. With a bit of patience and enthusiasm, I would suggest.
Absolutely. And we figured out that for a lot of you out there, it's very difficult to overcome the first hurdle, and that's how much money can I start playing with. Because at the beginning, let's be honest, if you're not experienced, it's going to be learning money or playing money, at least for the first several investments until we get a feeling. So we've prepared a 6-step guide which actually addresses exactly the type of people who are rather beginners, who don't know where to start, but who kind of already start realizing that it's high time to start investing after so many crucial events happening around us with banking collapsing and banks collapsing and inflation, geopolitical risks, etc., etc. But we're not going into the drama, we are going into the guide. So I'll continue right ahead with step number 1, and that is set up a goal what you're investing for. Very important to know what do you want to get at the end of your exercise. It's very important to know what time horizon are you targeting, because obviously that would have an impact on your risk and also on the return that you're allowed to expect. So already consider that. You need to be aware of your goal, your risk, and the expected return, and obviously the time horizon which you're investing for.
This point of knowing in what you are investing and knowing your time horizon is very important. And you shouldn't just start with getting into investing without really knowing for what you do it. Because whether you invest for beautiful holidays later this year or for your retirement, these are actually completely two different things. But we are getting there. Now, coming to point number 2. And this is get familiar with the basics. And here it's actually as for any other topic. The beginning might be a bit, I wouldn't call it hard or tough, but it needs a certain effort. And here I have an example of myself. And about 2 years ago, I actually went into astrology. And there it's exactly the same. I mean, you need to understand the fundamentals. You need to understand what kind of planets are out there. You need to understand the zodiac signs, etc. So there are the basic elements, and somehow you need to find a teacher and a way of getting the information which makes it very easy for yourself. But yes, maybe there a bit of effort is required, but pretty soon you realize that you are getting the feeling of it. And this is actually the crucial point. And this is exactly the same with finance. Over time, you really get a feel for it. And then I would say it becomes very easy, no?
Absolutely. I like the link between finance and astrology. That's a very good one. And you can also look at it like learning a new language. You need to know the ABC. You need to know what means what. And you need to know how to build sentences and can't really talk in this language. And that's pretty much what we are addressing here. And point number 3 is something very important when you learn a new skill. Now that you have the theory, you now have to start learning and practicing your instincts. And my favorite analogy here is I still remember actually when I started learning to drive a bicycle, and I had this beautiful red bicycle, and I would, first start driving with these supporting wheels, and I would fall over and over again. I was actually training with support wheels in a rather safe environment. That is what we would also recommend to you before you really take real money in your hands and start purchasing stocks, funds, and ETFs and whatever is out there. First, build a paper portfolio. First, try to see how the markets are moving, what's happening with your portfolio, and how do you react? Are you panicked? Are you okay? Observe your reactions. Those things are very important because it will give you confidence, and it would give you a feeling what you should watch for before you really start properly driving a bicycle or a motorbike or whatever you want to drive.
True, and this step is somehow between learning the basics and getting then into the real investments. And it's a very nice connection between both steps, and deserves to be an own step or a step for itself, because it allows you to really take already a very real situation and experience it. So you have a hands-on learning, so you are not stuck in theory, but you really are getting into reality, but you are not putting money at risk or a chance, however you want to put it, already in this step. But then also you will realize that the next step number 4, doing real investments, becomes really easy, because you already have the feeling for the markets, you have developed an idea how your investment might behave, how you behave, or how you react in certain situations, etc. So now really the next step number 4, is deciding for investments. And there we are getting also back to the step number 1, when Luba was mentioning that you have to know for what you are investing. And it depends, right? I mean, we mentioned it before. If I have a short-term goal, or I want to have beautiful holidays, I want to buy a bag, or I want to buy a car, you name it, you need the money maybe in about 1 or 2 years' time, and you might have another strategy in comparison to long-term investing. So for me, I decide on my time horizon, then I decide on the risk I'm happy to take. Maybe even though my horizon is only 2 years, I'm happy to gamble a bit, because I think, okay, either the holidays happen or they don't, and maybe they are a bit nicer or a bit more basic, whatever. So it really depends what you want to do with your money and how much risk you want to take. And then for me, it's always also important that I go along the lines of investments I understand.
That the latter one is so important, because and you could see from all major gurus, investors like Warren Buffett, like so many others out there, the credo number 1 is actually invest in what you understand. I want to say something about the risk of investing. And you probably have heard this very, very famous quote from, it's actually not originally from Milton Friedman, he's the one who is using it. There is no such thing as a free lunch, right? There is a book of him which appeared in 1975, and it actually kind of describes in a very intuitive way that you can't have more without taking a little bit more risk. And when we were speaking with friends, very often they say, look, I want to double my money. And then like within a year, and we are like, okay, great. And they'll go like, yeah, but I don't want to lose more than 20%. And you know what? Actually, by practicing and looking a little bit at the markets, you get exactly that feeling. If you don't want to lose more than 20% over a year, chances that you double your money within a year, very close to zero. Because the concept of losing certain amount per year and the concept of receiving something at the end of the year, i.e. risk and return, go hand in hand. That's why we always say, start learning, and obviously when you decide on your real investments, be very mindful exactly also on those aspects. Point number 5, selecting a broker. We have a huge issue. When Tonia and I started trading, there were no such things as cheap brokers. So you really had to start with quite a lot of learning money at the beginning. I remember that when we did the first option trade, and it was in 1998, it was when Schweizerischer Bankverein und die Schweizerische Bankgesellschaft actually had this union, and we bought options just prior to the waving it through that there are no competitive disadvantages. You can imagine we made a lot of money, but we were 5 people who actually could really allow to put a certain amount of money to even buy the minimum size of contract. Thanks God, these times are over. There are a lot of very attractive brokers out there, also in Switzerland. Historically, these so-called zero-cost brokers come more from the Anglo-Saxon part of the world, but we have a lot here as well. And I'm sure for those of you who are interested, you've also come across familiar at some of the names. Be mindful that depending on what you want to trade for, i.e. whether stocks, bonds, or ETFs, you may select another broker.
Yeah, maybe one point to add there, and you mentioned before there is no free lunch, and I'm a big fan of Milton Friedman, and we are getting into economics again when I can become really euphoric. But there is also a point, there is no free lunch in connection with brokers. And many brokers, they advertise that they are for free, they are cheap, etc. But you have to be aware that somehow they need to make money as well. And you might want to check out the disclaimers or on the internet page where they explain their business model, how they make money and whether you feel comfortable with that. Because very often they work in collaboration with bigger banks and they are selling their order book. There is nothing bad with it as long as they are being transparent and as long as you feel comfortable with that.
Yes, and also what you should consider is that be mindful of the type of fees which actually arise around investment. Why we are saying that? Because let's suppose you start with 1,000 Swiss francs, right? You obviously would be very careful how you choose your broker because of the depot fees, which this is fees number one, which appears around when you really go into trading. And then the second piece, obviously, you need to look at are the transaction fees. How much does it cost you to buy a certain stock fund or ETF? And how much does it cost you to sell the position? So speaking of learning money, there would always be some kind of a fixed cost amount which you would need to consider when you start investing, because that would be, maybe I can describe it that way, those are the fees which you pay for using the infrastructure of a broker or a bank. And it's absolutely valid.
Point.
Yeah, that needs to be, thank you, that needs to be just considered. Luckily, we're in times where those fees are actually reduced. And the third fee structure which you need to consider is actually inactivity fees. So consider you have depot fees, transaction fees, and inactivity fees. Some brokers may tell you, speaking of hidden fees on zero cost, some brokers may tell you our depot costs zero, but if you don't trade, you're going to pay, for example, inactivity fees. So that is actually also a way to be remunerated for the brokers for the infrastructure.
We are already almost done. We have already a broker. We know in what we want to invest. We acquired the basics. And yeah, we feel somehow already pretty good in investing. So you have done your first investment, but there is still one step outstanding which shouldn't be ignored. And this is making a habit checking out the financial news and your investments. So you don't need an hour a day or not even half an hour a day. Very often just 5 minutes are more than enough. Maybe you're commuting and instead of your social media channels, you can dedicate 5 minutes to financial markets. Check out how your investments are doing. Check out how is the currency doing, in basically the currency in which you do your investments in comparison to other currencies. Check out how the broad indices or the broad markets are doing. Are stock markets in Europe going up or going down? What are they doing in the US, etc.? So you're developing a feeling how your investments are doing, whether they are performing. Are they performing better than the market? Is the market performing better than your investments, etc.? So the more you make it a habit to check on the situation, on your investments, the more you also develop a feeling in what else you could invest. And it's becoming easier and easier.
Yes, and it also helps you to get to know yourself, how you react in stress and panic, right? People tend to be very euphoric when everyone is euphoric and very depressed and stressed out when things are turning sour. And I remember that after the crisis in Lehman Brothers 2008, March 2009 was the absolute deep level on the equity markets across all countries. And very few people invested back then because it was such a panic that people were basically paralyzed. And basically no one really used this, credo, buy low and sell high, right? Because when it really gets low, back then people were very, very scared. Mind your own emotions is long story short. And another thing which we warmly recommend is it's word journaling. It helps like in everything. When you try to establish habit, you want to write down what are your thoughts, what are your feelings, how do you progress, note down this progress. That's super important. And a third point, what we care a lot for on UMushroom and also other fellow fintech platforms out there do the same. We cherish to build a very active community, because if you want to establish a habit, if you want to change certain type of behavior, the easiest thing to do is actually to be part of a group. And in our case, for example, we are very proud to offer everyone who signs up and who tries to understand a little bit more about her or his investment behavior are the so-called investor types, because you're naturally linked to certain group which has similar behavioral patterns. Some may be more knowledgeable, some less, but you can obviously arrange and decide whom you want to follow. So being part of a community is really key.
This is a very important topic. So being part of the community, to learn from the community, but then again, it also helps you to really develop your own intention for investing and your own view. And this is for us one of the most important points, that you get a feeling for in what you want to invest, and not because XYZ is telling you in what you should invest. Because if you always rely on other people, then very likely it could happen that you invest when the markets are already very hot or euphoric and very close to a bubble, and you get out of your investments when things turn sour, as Luba said before. So in developing your own feeling and your own skills in finance, we also would like to give you a hint, and later this month we are actually starting UMushroom University, and we will offer you there basically an entry ticket, how to learn investing and to understand the financial markets better, to understand money, and basically also how our system works.
Very well, absolutely. And then we have some additional tips to you next to those 6 steps. Before we move to our additional tips, very happy to do a small summary of the 6 basic steps you need to consider when you want to start investing. Step number 1, be mindful and aware of what is your goal, what are you investing for. Step number 2, get the ABC of finance and learn about the basics, how the markets function. Step number 3, don't start with real money immediately. Start with developing your instincts. Open first a paper portfolio to see how you actually behave. Step number 4 is actually decide what you want to invest into when you are moving into effectively starting to trade. Select your instruments. Step number 5 is select a broker and consider what are the infrastructure costs which you need to pay in minimum before you really want to go into trading. And step number 6, our favorite step, develop healthy financial habits. And now to the additional top.
There is one tip which is very crucial to me, and this is there is no perfect timing. And very often in our careers, we have seen colleagues, but also clients being very hesitant in investing, saying, yeah, maybe there is a better moment, maybe tomorrow, or maybe the prices are correcting. They are waiting for the big correction because then the entry point might be better than today. But usually these are exactly the situations where markets go up and up and up, and you're losing out on the entry point basically every day. And here our suggestion is to invest maybe just part of it today, and then you invest another part maybe in 1 week's time, but you don't have to put all your money at the same day into the same investment. So splitting is one possibility in order to get a diversified entry point, and you don't have to decide for 100% of your money whether it's a good day or a bad day.
Step number 2, we already mentioned it, mind extreme emotions. Don't panic. When everyone sells, doesn't necessarily mean that you also have to sell. When everyone buys, doesn't necessarily mean that you also have to buy. Follow your own tempo, have your own strategy, and simply observe what the others do, but only as an input factor, not necessarily as a guide, what you have to do as well.
Also, tip number 3, we touched it a bit already before, and this is really getting your own point of view and building your own habit of getting into financial topics. And for me, it's always very satisfying to see then when I read the headlines in the newspapers, political headlines, what's going on in the world, at some point, very quickly, these news always translate into financial markets. And you will see over time, this becomes really exciting, the better you understand it. And the better you understand the financial markets, the more confident you're getting in investing, and hopefully the more successful.
And tip number 4, our absolute favorite, no one has a crystal ball. A very simple example, we used to work at the trading floor for many years, and naturally research analysts, sometimes their forecast can be good, but sometimes obviously there could be so many macro changes and there could be so many unforeseen events that actually the outcome is a completely different one. And the best recent example is actually last year, the beginning of 2022, the major banks on the Wall Street would project an interest rate raise in the USA of 0.5%. We actually had a hike of almost 4%, 3.75. It's really insane how macro conditions can change in such a way, unforeseen geopolitical events can contribute to such political interferences in the system that you cannot predict the outcome. So if you think that someone else long-term knows better than you, guess what? That's one of the most common wrong beliefs around financing. Of course, that implies that you need to spend time, as we mentioned, that you need to educate yourself, all the points we've been mentioning above. But we would love to strongly encourage you to develop self-confidence day by day, same like money grows on a compounded principle. Exactly, that's how also your knowledge grows on a compounded principle, your instinct grow. And if you practice and exercise every day, and we would strongly encourage you, minding that there is no crystal ball out there, and you're the one who actually can predict as accurate as anyone else if you collect the necessary experience.
And given there is no crystal ball, it's also so important that you invest in what you understand. Because maybe you're investing in a sector and this sector is very well understood by you because you might be working in this sector. So it's always a much better idea to stick to what you know because you might have the best idea what's going to happen there. And then the second thing is, just to be invested already helps. There are many theories about Warren Buffett, why he's so rich and how about his strategy, etc. But his biggest advantage was that he was always invested. And this is one of the crucial points.
Absolutely. Very well said. For those of you who have questions, we are more than happy to help and support. You can write us anytime at hello@umushroom.com. If you have further questions on how to select a broker, on where to get education, on what should be the first steps in the financial world, we are very happy to guide you, to accompany you. It will be a pleasure for us. And with that, I would say we've come to the end of our podcast. Thank you.
Thank you. Looking forward to see you soon.
Money!
What Your Bank Doesn't Tell You, a podcast by UMushroom.